let's check out FINSYNC reports. So what's happening in FINSYNC, because it's an all-in-one solution, is that the accounting of everything that touches cash is happening automatically. So the traditional financial statements like income statement, balance sheet, cash flow, etc. are all being updated as business is being conducted. And then for the accountants, for the more complex accounting for things that don't touch cash like depreciation or amortization, there's a journal entry tool as well. So if you're a bank that's offering FINSYNC, you have an all-in-one accounting solution. You have your own branded accounting package that supports both cash and accrual and is a more efficient tool because everything is in sync and accounting is updated as the business works. For businesses that want to get more granular, let's say they have multiple locations or departments. They can create those as attributes. So that's a way for a business to drill down into their reporting to understand how things are going location by location or department by department. If a business needs to share reports, they can do that in a few ways. One is to download the transactions into CSVs if they're going to be used in Excel or as a clean PDF report. That said, FINSYNC is a multi-user environment as well, so businesses that use FINSYNC can share access in real time with their accountant or bookkeeper without giving that person the right to move money. That user can simply access reports and see what's happening in the business without actually taking action. So that's how accounting and reporting is integrated with FINSYNC.